Welcome back to the YouTube channel of Old Bloke Crypto on February the 13th, 2024. And nice to be able to close out partially a high time frame position overnight, Australian time. I've been sitting on this position for a number of weeks now. As a high time frame trader, one tends to do that. As periods, it can be many weeks before one closes out a trade or even opens a trade. But anyway, so that was the result from last night. A nice little earner. And I dare say there might be some more in the next few days, and we'll get into that in just a moment. I'll just say at this juncture, nothing on this channel is financial advice. Please hit the like and subscribe buttons and the notification tab to be notified of future videos. And I dare say there is going to be some more opportunities for trade and hopefully profit in the next few days as things have started to get rolling in the markets. So I'll describe how I go about my trading and this particular trade later on during the video. But suffice it to say, as I said on Twitter this morning, I took my TP1, TP being a take profit position at 26.20. That was nice. In fact, I ended up getting 26.27, which is even nicer. So the TP2 for this trade is the yearly high of 27.20. Haven't quite got there yet, but I won't be surprised if we get there in the next 24 hours. Another thing to keep in mind is little games that the market makers, or as I like to call them, the market manipulators, like to play. And I'm going to talk about that in just a second, about the liquidity and how it's moving around and how you can take note of that and outplay the market makers at their own game. But what you need is patience, discipline, experience, and sufficient capital for the size of your trades that it doesn't matter what they do, you can handle it. I'll talk more about that in just a minute. And when I say handle it, I mean that you have sufficient margin that even if the price of your particular token, in my case ETH is what I trade mostly, moved by 20% or more, you're not going to get stopped out by the market manipulator. That means that you can close your trade when you choose to, rather than when they choose to. It's a big difference. Anyway, let's have a look at what happened last night. Now, these are the size 3 liquidity bubbles that I talk about quite frequently on this chart that I've set up here. And so these went off in the middle of the night, and later on, or early hours of this morning, I should say. And when I get 2 of these size 3 liquidity bubbles on the 1 hour chart, that is my signal that the market's getting toppy and it's time to close out and take profit. Now, this is the signal that I use to do so. You do you. So anyway, I close that out, and you'll see here 26.54. By the time I got round to it, it was that price that I mentioned before of 26.27. Yes, that's right, 26.27. Anyway, so you'll see here that these blue crosses represent the PSAR, which is the perpetual support and resistance. It's basically what the market thinks is going to happen in terms of perpetuals over the next, well, in this case here, the next hour. And you'll see here we've hit a parabola. Now, this is indicative. When we hit parabolas, there's more room to go. So it's saying that the market is saying overall, from the perpetual perspective, that we've got more room to go. When you start seeing these blue crosses appear above the price, that's an indication that the market's saying, hey, we're topping out in the short term, or in this particular time frame, and time to look at closing your position. Similar to these liquidity bubbles, but I find that these tend to go off first. And for me, who's happy to close out a trade at a good profit, I'm happy to go with that. And I find it works well over 70% of the time, which is enough for me. Before I move on to other charts, just have a look over here too, and just take note of this. The VIX is up quite a bit. The S&P and the NASDAQ are off their highs. Well, the S&P has just been nudging all-time highs anyway. The DXY's sitting around that 104 level, and the Dow Jones is doing a little bit to the upside, but not incredibly much, as we expect from the Dow Jones. But of course, the NASDAQ is most relevant to us, and the S&P, but they are off a little bit, nothing to be concerned about. It's just the VIX is something that I'm keeping an eye on, and of course the DXY, but the VIX particularly being coming up. It's been at historical lows, and it's got a lot more upside to go, but I won't go into that great detail there. Having said that, however, both for the US dollar and for the DXY, sorry, the US dollar is the DXY. The US dollar and the VIX. Let's have a look here at the CPI, which is coming out Australian time. This is at 12:30 overnight. And this will be very interesting to see if it hits these targets that are set there and expected. Well, we can just expect the market just to continue on as it was going to regardless. But if we miss to the high side, you can expect a negative reaction from risk on assets, which of course includes crypto. If it misses to the downside, hopefully it'll give us another bump along. But we shall see what happens tonight. Well, I won't be seeing, I'll be in bed. But anyway, I'll see when I wake up in the morning. Now, let's go and have a look at the liquidation heat map, which is very interesting here. Now, check out these liquidity charts, these liquidation heat map to start with. See this big yellow bar here, which is at about 2470. Yesterday, it was down to 2400. So that's indicating that the liquidity is moving up and following price. Now, there's two things there that we can draw from the two potentials. Either the market makers are playing games with their bids in order to draw the price down to this level, or retail traders are chasing price, and I think it's more of the latter, especially with the psychological levels of 50,000 for Bitcoin being tagged just in the last few hours. And you'll see this previous level around this 2400 is starting to fade out now as liquidity moves up and chases price to the upside, which is interesting. Obviously, price could quickly come down and take out that 2470. I think it's unlikely, and I'll go into more detail about why that is. Certainly in the short term, always possible, of course. In the crypto market, you can never say anything's impossible, which is one of the exciting things about it, and one of the reasons I transitioned from the Australian Stock Exchange, which is as boring as all get out when compared to crypto. But you can move a lot more percentage-wise in a very short period of time. So anyway, without going into great detail there, that is very interesting on that heat map to see where the major liquidations lie there. The only downside to that heat map was it was Binance only. And I don't like just using one exchange because that data can be skewed. This table here, this graph here, is from Binance, Bybit, and OKX. So it covers three big exchanges. And it makes the data, quite frankly, more valid. So looking at the 7-day chart, and you'll see that liquidity skewed right down to the downside here. And what we were talking about was at 2470. Let's put the cursor on it there. And you can see there's a lot of thick liquidity down here that can be grabbed to that point and beyond that, quite frankly. Let's go back to the 2400. There is heaps of liquidity there that can be grabbed by the market if it so chooses. But look to the upside. There is not a lot to the upside, which leads me to the next point, which I'll share in a minute, around that 2720. Now, that 2720 is a yearly high. And look at that. There is not a lot on the weekly of liquidity sitting above that to draw price towards it. And looking at the 1-day chart, there isn't a lot still above there on the 1 day. And that's indicating that not a lot of shorts have come in to the market because the consensus is that price has got further to go to the upside. And that's quite reasonable. And I'll explain that further in a minute. But crypto and reasonable don't always go together. So if you look at all this liquidity to the downside, you need just to keep that in the back of your mind as a potential scenario. So now let's get into the price charts and see what I'm expecting to happen. And as you can see here, I marked out in previous videos, we've got the range here that we were previously operating in for some time, which is at 2390 down to 2131. We're broken out. Remember I said this was a deviation or a fake out. Come back into the range. And as I said in the last few days, once you get a big deviation to the upside like that, you don't tend to get another deviation as a deviation to the upside and then come back into the range. Normally this will be a breakout. The only time you get another deviation straight away, or not the only time, but in general, my experience is to come to the downside first. And again, it's just the market manipulators shaking out the retail traders for their juicy liquidity. Anyway, so we're above the range. Here we go. And isn't that exciting? We're currently sitting on 2663, and you can see closed a great, and this is the daily time frame, of course, great daily candle yesterday. And so we've got that 27.20. Now, of course, that's the magical yearly high, and yearly highs tend to pull price towards them in these situations to test them. And you can see this high was a wick. And so, as I've said previously, 90% of wicks get filled to the 50% range, 80% to the 100. So I took that take profit at 26.20 yesterday, and I'm expecting to close that trade out at 27.20 in the next 24 hours because of this momentum that's happening here. And you also see my favorite indicators are the EMAs, and they are particularly useful in a trending market, as I've mentioned previously, and we're trending now. And you'll see here to 200, 50, 21, and 12. They're all lined up to the upside and they're starting to spread. So we could have a lot more upside than 27.20. But anyway, I'm going to close that position then. And if we do get to that, then I will put a placeholder in place. And what's a placeholder? A placeholder is my particular term that I use for when I want to stay in the market in case price continues to continue on in that direction, in this case to the upside. And I won't be at all surprised if it does. I also won't be surprised if we get a pullback towards the top of this previous range, which was 23.90, not that far, but more towards the 24.70 level where that big band of liquidity I was referring to previously sits. So to come back into this range, I won't be surprised at that, but I'm going to put that placeholder in, which will be 10 ETH at 100 times leverage. Now, what if I'm wrong? Well, believe it or not, it does happen occasionally that I am wrong. And this is why I have a permanent hedge set up with my Ethereum trading. Now, when I say permanent, and I'll discuss this some more in a minute, it's pretty permanent. It's always over 80%, but not always 100%. So that's permanent enough for me. And this is an example of what happened last night. I closed out part of my position, which is 26 ETH, and for a gross profit of 2023. And once Bybit came and did their rapacious bit of removal of fees, etc., that came down to about $1,600. $1,600 because I also closed part of my short hedge. I trimmed off 1 ETH off my short hedge. So that was $386. And you think, wow, that's a lot to take off. But the point is that represented about 20% of the overall increase or the profit that I had here in this 2023. So I ended up, by the time the fees were taken out and by the time I'd closed out part of this hedge, ended up with about $1,600. And you might think, wow, that's a strange strategy to take. But if you have a think about it, in my trading strategy, and I reiterate, you do you, I'm quite happy to take 20% off my hedge each time I close out a trade, knowing that when the time comes that hedging position, which is a short at this stage, becomes the main position when we have the inevitable pullbacks, which obviously occur regularly in crypto, even in bull markets, that when I have a trigger to enter that short trade, I will have a much better entry price on the short trade with that hedge. So it means that the more that I want to add to that hedge, for example, say the hedge is down to 5 ETH at the time, and I want to put another 5 ETH into it. If that price is a lot higher than when I open that hedge, the actual price, once I make it 10 ETH in the short, if you're with me, is a much better position to enter that short trade than from way down below when I started that hedge. And so it's a constant manipulation of the position, the overall positions that I'm taking, the long versus the short. And I'll show these trades as we go along. There might be more in the next few days to show it and make it more clear. One is probably not enough to give you that idea. But one of the keys to this is to having sufficient margin, that I am not stopped out by a wick, by a black swan. Now, there could be the blackest of black swans. China could invade Taiwan. Old Winnie the Pooh could stamp his little feeties and say, right, I'm going to take out that pesky little island. Now, you imagine how the markets would dip then. It might be 40%. So you have to decide how much margin you're going to have in place. So I always have at least 20% margin either side, knowing that I could get stopped out by something like that, but that is less rare than a less than 20% drawdown or wick to the upside in a very short space of time. So I very rarely get stopped out. It's been quite a long time since that has happened, but you never say never. In the meantime, I'm profiting on a regular basis from this strategy. And last night ended up with $1,600, which is better than a poke in the eye with a sharp stick, as we say here in Australia. And further to that trading strategy, if and when I hit that TP2 tonight at 27.20, I will also be trimming further my hedge, which goes with the analogy trimming the hedge, and 20% of that profit will go towards trimming that hedge. And then we'll see where we go from there. The market could continue to go to the upside. And if it does, I've just placed my 10 ETH placeholder in place, ready to take advantage of that. If it doesn't and it comes back and is forming a new range, I'm ready when the time comes to add to my short position when the indicators are there, the indicators I use, and to maximize the price of it because I have trimmed that hedge so that when I enter that position, it's at a more advantageous position for me to take profit from the short. Anyway, we'll see when that time comes. I'll show it to you, but hopefully you're with me and hopefully my explanation hasn't been too convoluted. Now let's have a look at King Bitcoin. As you see there, well, right above the yearly highs and 50,000. I mean, it's all very exciting. They were currently sitting on 50,000, even though we closed below it. And a little bit of a play that the market makers had with the retailers. I won't go into great detail there, but if you look at that chart, then you're going to have to say there's likely to be more to the upside. This is, of course, on the daily high time frame chart. And who wouldn't say that? Got to go with the data. So we're expecting more upside. Now, a lot of pundits are saying 52,000 is going to top us out. It may, or there may be a surprise because the ETFs are just sucking the market dry with Bitcoin going into those funds. And this is one of those left field things that I have seen over the years in my experience in trading, that the market will be expecting a certain thing and they can't see the wood for the trees. And so these BTC ETFs, you can get FOMO coming in to say, hey, from their members of these funds, hey, we're missing out here. It's hit 50,000. We've got to get in before it gets to 100,000. And this could really go parabolic. So again, because I play both sides of the market, I'm ready for it. I won't be surprised if we get continuation tonight, at least until 52,000, which seems to be a consensus that there's going to be profit taking. We'll reevaluate then and see where the liquidity is, where it lies, and where it's heading to. And just one final chart to look at on this bit of a saga today, quite a bit longer than I normally make videos. Have a look at the ETH BTC chart. You'll see that we had that stonking green candle yesterday. ETH outperformed BTC by nearly double, which is great. Now, as the saying goes, one swallow does not a summer make. And if you look at this chart, that's nice, but it's not really telling us anything that we could hang a hat on, in the sense that you've got all the EMAs stacked above it, etc. There's a lot more work that ETH has to do to start outperforming Bitcoin. This could be the start of it. Who knows? It's just interesting to keep an eye on it. And I do hope that it continues on. And I think it inevitably will, whether now is the time where it continues on when we're only several months out from the alleged ETF approvals. And I say alleged because it's a different beastie to Bitcoin. And I won't be surprised if Uncle Gary knocks it on the head. So there's a lot of froth over that. I'm not engaged in that froth and I'm not taking too much notice of it. But we'll see if it continues to rally in advance of that anyway. We shall see, but yesterday was nice, so we'll just keep an eye on that. Anyway, this is Old Bloke Crypto. Enjoying the charts, enjoying green days. Let's hope it continues tonight. We've got approximately 11 hours until the US session opens. Not much happening in the Asian session. Let's see what happens in the UK, but really all eyes on the US session and the CPI print tonight. Stay safe with your trading, and I will talk to you again soon.